Today we're going to be looking at failure to file penalties. So if you'll bear with me just a minute, I'm going to share my screen with you. I've taken some notes from chapter 3 on failure to comply penalties. Um, so first of all, if you're an employer or you could be an employee who is responsible for collecting and remitting employment taxes, are subject to penalties for failure to submit the correct employment tax to the appropriate government authority. The penalties can range from additions to the tax liability, interest charges, fines, or imprisonment. And so I'd like to discuss some of these with you. The first thing that we need to talk about is if you fail to file an employment tax return. If you fail to file an employment tax return by the due date, then you could be assessed some additions to the tax, or you could also be fined or receive criminal penalties. And some of the additions to the tax that might happen if you are filing the tax returns on a date other than when it is due, you could receive a 5% penalty of the net amount of tax that should have been reported, less any timely payments that you might have made. Plus, you could be assessed an additional 5% penalty for each month or fraction of a month during which the failure continues, but you won't be charged in excess of 25%. If you are fraudulent, you file a fraudulent return and it's proven that your return is fraudulent, you could be assessed a 15% penalty that would not exceed 75% of the assessed amount for fraudulent failure to file. So if the IRS comes after a company and they prove that they were fraudulent in the reporting of a employment tax return, that they did not file that return, and they knew that they hadn't filed that return, then they could be subject to a stiffer penalty than what the normal addition to tax is. They could possibly be charged a maximum penalty for failing to file within 60 days of the return's due date, or if they haven't filed within 60 days of the return due date, they could be penalized the smallest of 100% of the amount that's shown on the return, or $435. So you can see these are pretty large penalties in each one of these cases. It's very important for you as an employee to file the return on a timely basis and have the amounts on the return correct. There could be criminal penalties also that would be assessed on a company or an employer who is in charge of filing that return. There could be a penalty of $25,000 that could be assessed on an employer who is not a corporation. And if it's a corporation, the penalty gets higher. It could amount to $100,000. And or there could be imprisonment of up to a year for the person who's responsible for that form. If an employer willfully signs a return that is not correct, they can be fined up to $100,000 and be given imprisonment for up to 3 years. So if the court rules that the employer willfully signed a return that they knew was not correct, then they could get penalties even higher and a higher amount of prison term for that. There are also penalties for failure to fully pay the employment tax. So this is saying that you may have filed the return, but you didn't pay the full amount that you should have paid to the government. And again, with failure to fully pay employment tax, there's going to be additions to your tax, and there's also could be some criminal penalties involved. A penalty of 0.5% of the amount shown on a tax return per month, or a fraction of a month, not to exceed 25%. That's the penalty that could result if you are, it's determined that your company has failed to fully pay their employment tax. This 0.5% could be reduced, though, if the payments had been made on or before the beginning of the month. The amount of the penalty is calculated can be reduced by payments that are made on or before the beginning of the month. So they'll reduce the payment if you will go ahead and pay, or they'll reduce the penalty if you'll go ahead and make your payments correctly, but you have to do that by the beginning of the month. If both penalties for filing a late return and for not fully paying the tax apply in the same month, the failure to file penalty would be reduced by the amount of the failure to pay penalty. So in other words, if you got hit with a penalty for failure to file and a penalty for failure to fully pay your employment income tax, then the penalty could be reduced by, or the penalty could be reduced by the amount of the failure to pay penalty. There is also a separate 1% per month penalty for failing to pay a tax amount due that was not shown on the return within 21 days of the IRS notice. So if something is wrong with your return and the IRS catches up with it and they give you a notice and you still haven't done anything within 21 days, you're going to be assessed an additional 1% penalty per month for failing to pay the tax due that was not shown on the return. It could mean that if you haven't paid within 10 days and the amount of your tax that you owed was $100,000 or greater, that you would be assessed this 1% penalty too. So it really depends on the amount of the taxes that are owed as to when the days are, or when it becomes a monthly penalty that would be charged at 1%. You could also, in addition to any taxes due, that you could be charged interest at the rate of 5% per year. If it's a large corporation and they have underpayments of their employment taxes of $100,000, they'll carry an interest rate of 7%. So when they're going to take the interest at 5% or 7%, depending on whether the amount is more than $100,000. assessed in addition to the 1% penalty for failure per month, for failure to pay the tax, and also the 0.5% penalty. So the penalties just keep adding up for a company that has not fully paid their employment taxes. If there's a failure by the company to make a reasonable attempt, or if there is intentional disregard of the payment rules, it'll cause a 20% penalty on any underpayment. A 75% penalty is assessed on the employer if it is proven that there was fraud with the intent to evade taxes. So if the IRS can prove that you were fraudulent, you get a higher penalty. If they prove that it's negligence or it's an intentional disregard of the payment rules, you could also get a penalty, but it'll be a little bit less. And if you're proven that the employer was willfully failing to collect the taxes, the penalty could be 100% of the tax due. So pretty much they're telling you here that it's important for you to file your employment tax returns on time and at the correct amount. If it's incorrect, you could receive penalties, or you could receive a criminal penalty. You could receive penalties in addition to the tax, or a criminal penalty, depending on what they determine you have done. And so that's all I wanted to talk to you about in this video. I urge you to read over your textbook beginning on pages 330 and going to 3-33. So go from pages 30 to 33 in chapter 3. Read over those carefully, because it's very important that you understand that there are penalties associated with not filing the forms by the due date and not filing them properly. And so the next time we meet, we're going to actually do some problems that are associated with these penalties. So I just wanted to give this little bit to you before we start those. So we'll stop sharing with you, and we'll see you again next time. Bye-bye.